Hey everyone, welcome back to Corporate Decoder, the place where we decode the mysteries of corporate filings. And let me tell you, this latest report from Odyssey Health is it's a purchase agreement, and that's putting it mildly. Alright folks, we're diving into an 8K filing from Odyssey Health Inc. Now an 8K is like a company's urgent bulletin board telling us about big material events they can't wait to share. And this one dropped on July 29th, 2025. So what's the big news? Odyssey Health has inked a deal, a pretty significant one, with Mast Hill Fund LP. Think of it as a deal to raise money, but with a twist. This filing is all about an agreement, specifically a purchase agreement that was signed on July 29th, 2025. Through this agreement, Mast Hill Fund has agreed to buy up to a massive $25 million worth of Odyssey Health's common stock. Now this isn't happening all at once, it's going to be done over time whenever Odyssey Health decides they need to sell some shares. Just a quick note on where they're based. Odyssey Health is incorporated in Nevada and their principal executive offices are in Las Vegas. Nothing too splashy there, but it's good to know the basics of who we're looking at. Looking at their stock registration, Odyssey Health's common stock is traded on the OTC market under the symbol ODYI. This means it's not on one of the big exchanges like the NYSE or Nasdaq. So it's generally considered a bit more speculative, a bit more of a penny stock type of situation. Now let's get to the heart of this 8K. It's all about this purchase agreement. Odyssey Health, or the company as they call themselves, has entered into this agreement with Mast Hill Fund LP. The deal is basically that Mast Hill will buy up to $25 million of Odyssey stock. But here's the catch, and it's a big one. Odyssey can only actually sell shares to Mast Hill once a registration statement has been declared effective by the Securities and Exchange Commission, the SEC. This registration statement is a crucial legal step. It essentially tells the SEC and therefore the public exactly what kind of shares are being sold, how many, and at what price, making sure everything is above board and transparent. Without this, the shares can't be legally sold. Odyssey Health has the power to decide when and how much stock they want to sell to Mast Hill. This flexibility is key. They can do this for a period of 24 months, which is 2 years. They can tell Mast Hill to buy shares, but they control the timing and the amount. Specifically, they can direct Mast Hill to purchase up to 20 million shares of common stock. The price at which these shares will be sold is based on a fixed discount to the market price of Odyssey's stock right before the sale. This means the price isn't fixed in stone, but will be tied to what the market is currently valuing the stock at, minus an agreed upon discount every minor and agreed upon discount. Now, this agreement is pretty clean in some ways. Odyssey says there are no penalties for wanting to terminate the agreement. They can just give 1 business day's notice. Also, there are no clauses that restrict Odyssey from raising money from other sources, which is good. However, there's a big but here. They are prohibited from entering into certain types of transactions they define as variable rate transactions. What are variable rate transactions? Think of it as anything that would allow them to issue stock where the price or the number of shares can change based on market fluctuations or other unpredictable factors. This is likely to prevent dilution or making the Mast Hill deal less attractive. Another important detail is that Mast Hill can't just gobble up an unlimited amount of Odyssey's stock. There's a cap. Mast Hill can't beneficially own more than 4.99% of the total outstanding shares of Odyssey's common stock at any given time. This is intended to prevent Mast Hill from gaining too much control or triggering certain reporting requirements under securities laws. And to reiterate, Odyssey can break this agreement whenever they want without any fuss or extra cost. That's one-sided and gives Odyssey a lot of power in this relationship with Mast Hill. So why are they doing this? Odyssey Health plans to use the money raised from selling stock to Mast Hill for the usual suspects, general corporate stuff, keeping the lights on, investing in new projects, research, development, and keeping operations running smoothly. Some of it might even be used to pay company officers. This agreement is quite detailed and the full text is available as an exhibit, specifically Exhibit 10 in this filing. It contains all the usual legal stuff like representations, warranties, conditions for closing the deal, and who pays for what if things go wrong, or how the deal can be called off. Now there's a section here about unregistered sales of equity securities. What this means is that the shares sold under this agreement are not being registered with the SEC in the traditional sense initially until that registration statement is filed and becomes effective. Basically they're saying, hey, we're going to sell stock and we'll register it later. This includes a commitment to file that registration statement within 45 days after the RRE is executed. The RRA, by the way, is the Registration Rights Agreement, also signed on July 29th. This agreement ensures that Mast Hill will have the right to have the shares they buy registered for resale, meaning they can eventually sell them on the open market without issues. This registration rights agreement is filed as Exhibit 10.2. It's essentially a promise from Odyssey Health to help Mast Hill sell the stock they acquire, making sure it's all legal and above board through proper registration. But as is standard practice in these filings, they list out all the exhibits that support this report. We see the purchase agreement as Exhibit 10. And the registration rights agreement as Exhibit 10.2. And then there's 104, which is for the cover page interactive data file, which is what helps computers read all this information. Finally, we have the signatures, officially confirming that the company executives have reviewed and approved the contents of this report. Joseph Michael Redmond, the Chief Executive Officer, signed off on this on August 4, 2025. Alright, let's break down what this all might mean. On the surface, it's a deal to raise capital. Odyssey Health needs cash and they found a buyer in Mast Hill Fund. The fact that it's up to $25 million is a significant amount for a company trading on the OTC. However, the crucial point is that the money doesn't flow until the SEC approves the registration of the shares. This could take time and there's always a risk that regulatory approvals don't go as planned. The flexibility for Odyssey Health is a big advantage here. They control when and how much stock they sell, which is smart. They can manage the dilution and the impact on their stock price. The 4.99% ownership cap for Mast Hill also prevents any immediate hostile takeover vibes. But that prohibition on variable rate transactions is something to watch. It could limit Odyssey's options for future financing if they can't use certain flexible or market adjusting instruments. From a Warren Buffett perspective, we're not seeing any concrete financial tables here that detail revenue, profit, or debt in this specific 8K. This filing is purely about a material event, the agreement itself. To truly assess Odyssey Health, we'd need to look at their more regular filings like the 10Q or 10K, which contain the detailed financial statements. But what this tells us is the company is actively seeking funding, likely because they have plans or operations that require capital. The fact that they're going the OTC route and entering into this type of forward-looking purchase agreement suggests they might be in a growth phase or facing cash flow challenges that necessitate this kind of structured financing. The biggest takeaway is that while this agreement provides a potential lifeline of up to $25 million, it's contingent on regulatory approval. It's a sign of a company trying to secure its future, but the path forward still holds some significant hurdles. A key risk is the dependency on SEC approval and the potential for delays or complications. An opportunity, of course, is unlocking that $25 million to fuel their growth. Whatever that may be, what's your take on this deal? Does it seem like a smart move for Odyssey Health, or are there underlying risks we should be wary of? Drop your thoughts in the comments below. If you found this breakdown helpful, please give this video a like and subscribe to Corporate Decoder for more insights into the world of business and finance. And don't forget to join our Discord community linked in the description for even more discussions and analysis. Thanks for watching, and we'll see you in the next one.